The pre-market is green and we could get a further bounce from here. I'll show you what I'm looking at on the charts that give evidence to what we could potentially see for a little bit more of a recovery, perhaps a dead cat bounce, maybe not a full recovery because I still think that there's some concerns along the way, but wait until you see what I have for marking the bottom for QQQ. I think it's pretty darn exciting because I shared it months ago. And here we are today based pretty much on exactly what I said we would have. I know that I'm excited about it because it means that my analyses are on point, and that means that I'm sharing quality information with all of you, the highest quality that I am capable of. Not only do I have it here on YouTube, but I also have it over at the Discord. You guys can find the link for that down in the description. You can join me, the other panel experts, and thousands of members with a robust community full of products and services there to help you reach financial freedom. I'll tell you more about it later in the video, but for right now, SPY pretty much adhered to the same thing that the Qs did. We'll talk about IWM and how I said it would outperform to the downside if we did, in fact, pull back from the peaks that we had. And so you'll see that outperformance on today's chart. Bitcoin also looking super interesting right now. Wait until you see the potentially very bullish pattern that we have shaping up for Bitcoin. XRP could follow suit. It is at a critical moment. Like, there's just so much incredible stuff going on right now. I'm also going to briefly share NVIDIA and Apple because I think that those charts are also very interesting, and I can do that in a very short order here. So pay attention to what I have for you. This is what I shared going back a while ago, talking about just how much we retraced during the Great Recession when the financial system almost collapsed. So 78.6 retracement from October 2002's low up to the peak leading up to the Great Recession. And then that same low, October 2002, to any of these peaks that we have here, 23.6 or 38.2 were pretty much as it got. Now, mind you, 23.6 was all the big fears, and then 38.2 is where we actually had a bit of confirmation for that. Where did we find ourselves most recently? Let's zoom in so you can see. We actually pulled back to, there we go, you have it, you got it. Right here is the 23.6. We punched down through it just for a quick moment before quickly retracing back above it. And this is the monthly chart that we're looking at the moment. And I said that if we have recession fears with continuing evidence, in other words, that we have more of a confirmation that we're hitting that recessionary time. Now, mind you, this would be before the Fed starts cutting rates, because if the Fed cuts rates to down near zero and they start stimulating the economy, we'll turn around in a heartbeat. Things will go wildly bullish to see that happen. In the meantime, if we ride that pain train down to 38.2, you know that it's because the tariff news is off the chain, inflation news is off the chain, recessionary fears are just being triggered all over the place. I said watch for that bounce to come around at the November 21 peak, and that's all the stuff that we got. If we look more near term, what are we seeing? I said that this was a massive area of support for us, critical support. Watch for support around these levels. Check out the volume that we got with it as we pushed up on that with two gaps to fill to the upside. If we're able to fill both of those gaps on the way back up, that is quite a recovery from where we are at now, even in the pre-market. So as I look at it, that would take us up to about 465, which means that we would put about 36 points, $36 back on the QQQ as we look at it at the moment. So that would be about a 15% run to the upside. I will say 10 to 15% just to give it that little bit of flexibility in there, because you could be a little bit more technical and you could talk about where that would go. In any case, just with quick mental math, 10 to 15% to the upside if we fill both those gaps on this bounce. Now, mind you, then we start to get into this massive resistance that happens to be right around this level, right around that 466 number. So we'll say 465 to 466 is what we want to watch for as we make that bounce back up. Now, mind you, we have to continue monitoring what's going on with tariffs, what's going on geopolitically, what other countries are responding with around the world. We have to watch the inflation reports. Mind you, big bank earnings are also coming our way as we get into those quarterly earnings, and we have to watch the forecasts. Those forecasts for the next quarter could be the thing that tells us a lot more about what to expect in the market as well. If they start to give downward guidance across the different companies, lower earnings, those are things that are going to squish the market from a valuation standpoint, and we're going to see it sell off further, especially because the word recession would most likely come along with it, and you would also have layoffs in order to try to preserve those margins, if you will. So we're definitely looking for those things as those earnings calls come out to listen to see what happens. We have just enough time between now and earnings to make a really big fat little bounce coming up here. Now, mind you, earnings could tell a story instead of we think that this tariff stuff is overblown, that it's going to be hard to enforce, that the United States is not going to be able to collect as much as they say because we just don't have the infrastructure, the bureaucracy to support it, in which case, if we chip away or erode away the ability for the U.S. to collect those tariffs and companies turn out that they're going to be fine anyway, well, then that could be something that would potentially be very good for the markets. We want to watch for that as well. So we want to listen to what the companies are saying. We want to hear that they're not experiencing as much margin compression, that they think that this is something going to be able to rotate through. I don't know if we're going to hear that. We're going to have to listen. We're going to have to watch those earnings calls, listen to what they say during those times and what that guidance looks like as we get into Q2 and maybe throughout if they give us the rest of 2025. I guess the word uncertainty is probably going to keep on coming along with that, but we do have a lot of depressed prices right now. If we go over to SPY, where do we pull back to? By the way, the 23.6, just like we did for the Qs, that retracement once again going from October 2002's lows to the most recent peak that we had. Big old fears coming our way. We pulled back to the 23.6 during that de-risking, and I still think for SPY, with confirmation, pulling back to the 38.2. If we go down to the daily chart, we have two gaps to fill here as well, going up to about 554, 555 would be the top of that gap, and it also puts us into some pretty massive resistance as we start to get up in there from about 545 to 555. It could still be a very good bounce for us. We got to watch the inflation reports that come out at the end of the week. And then we also have Michigan consumer sentiment. I don't want to keep discounting that. That could absolutely smack the markets down because consumer sentiment is something that can really signal if there's not going to be as much spending in the economy, which means lower GDP, which is one of the pillars that props up markets. And so when you have something like recession, that can be one of those things that shows some crumbling, if you will, in those pillars. If you haven't been watching my videos, my channel, I've been talking about the four pillars that prop up markets: GDP, inflation, monetary policy, and then the labor market. So depending on how strong they are to support the market, that's where you see it up high in the air. And as they start to show cracks, or they're thought to be cracking, they're thought to be losing some of their polish, that's where you start to get some of that pain in here, much like we saw with this most recent sell-off. IWM, I said, would outperform to the downside, and that's exactly what we got from the October 2002 low and until the most recent peak that we got. We actually pushed down below the 23.6, got almost down to the 38.2. So go halfway in between those, just, roughly speaking, to about where we found the most recent bottom for that. I would say that we probably retraced a fair amount towards that. So we'll call it about 32-ish, if we were to say that from a Fibonacci standpoint, that retracement that we had, about 32% of that movement. Now, mind you, we might be able to click on that there and then see how low that would take us. We had about a 30% sell from peak to trough on this thing. So for IWM, like I said, I'll zoom out on this so you can see on the monthly chart, and we live in between the red and the green. As a matter of fact, the white and the yellow is where we mostly live for IWM, and the IWM really starts to become attractive down below the green line. Took some time to get dollar cost average into that. And then in the spirit of dollar cost averaging, NVIDIA actually took a 2x leverage play on this through NVDL. We have a descending wedge pattern that we are starting to get back inside. Falling down below this can be really bearish. We are currently finding that recovery. We have a bit of resistance to fight through in order to get up there. This was support for us on the way down. You can see we broke all the way down to the second support area before really bouncing back up. We want to see us pop out the top of this trend line in order to see further upside from NVIDIA. I do think long term we have a really good recovery coming our way. I've been waiting for two-digit NVIDIA, and those days have come for us. So right now, get through the market drama that we have, get through this whole tariff stuff and the inflation stuff, and hopefully we don't hit that recession part of things. And I think we can really see more of that outperformance coming for NVIDIA. I think going down to that 85 really opens up that 2x performance level for NVIDIA. Apple stock, by the way, on the weekly chart, what we see here is that we were in a bull channel for a really long time, going back to 2020 all the way up until we fell out of the bottom of it. Kind of a bearish thing, but we've actually touched, for Apple stock, we've come down and we've touched the 200 week, and that's this orange line that you see coming up through here. That's actually a pretty rare occurrence to see us come down to that level. So for Apple, that's where you're seeing that bounce take place. We want to get back inside that bull channel. Tariffs are going to be a little bit rattlesome in the near term as we're watching that. Now, I said that there'd be some excitement for Bitcoin, and I'll talk about that in just a moment. I do want to say, guys, these technicals, I'm going to be updating them over at the Discord. You guys can join me over there. There's other panel experts as well, including people that follow TMF more closely, that follow bonds more closely. For me, I tend to be total market as I just really, really enjoy looking at all the pieces together and seeing from a holistic perspective, from a very well-rounded perspective, what exactly I think the market movements are going to be, including what exactly is going on for outside factors that we have beyond technical analysis. And that's why I provide the commentary that I do. The link for the Discord is down in the description. Make sure you sign up for the earner tier. I'll tell you what, the products and services are endless. The thousands of members that are over there already absolutely love it. I love the community that's over there. It's the best that I've ever had a chance to be part of. You get the bread bot, which can tell you when these massive movements are going to take place to the downside, to the upside. It's part of the bread recipe trading strategy that I use myself. As a matter of fact, it's the cleanest, most efficient, and effective one that I've seen for really putting alpha into my portfolio, and I think that you guys will enjoy it as well. And I'll tell you in just a moment how you can learn more about that yourself. But right now for the Discord, you also have advanced charting tools, you have AI tools, and you just have tons of support over there as well in your journey towards financial freedom. Links in the description. Now, there's coursework that you can find also in the description through Stockmo Academy. You can click on that link and sign up for the course bundle, which would be options, and then technical analysis, and then trading using technicals, including the bread recipe, which I use myself. Like I said, super easy to set up, super quick, and also super effective. Like I said, identifying those times that those massive movements are about to come, and then you could find your way to trade accordingly. There's even a Discord that goes along with that. It's a separate one that has a learning community that goes along with it, and you get that just for signing up for the course. You have lifetime access to that one as well. So guys, lots of ways to support yourself. Use code word doctor when you sign up for the courses, and that's going to give you a massive discount. And if you bundle the courses, that's going to save you even more money. With that said, let's get back in the charts. Let's talk about Bitcoin, XRP, and wrap this thing up for you. We'll put a bow on it. So Bitcoin, look at this. Bitcoin also descending wedge pattern, a lot like what we had for NVIDIA. You can see a few times that we peekabooed out at the bottom of this thing. Got a couple stray hairs sticking out of the top, you know. Don't want to go through and trim those off. We'll celebrate those times. So we have right now Bitcoin, man, we got a death cross forming up, and that doesn't necessarily bode well. That can be a sign of some bearishness happening, but I do think that there could be a very strong catalyst coming our way. As a matter of fact, the Sovereign Wealth Fund, depending on when we get some sort of announcement for that. Now, mind you, maybe we do sell off more. I did say that we could come down to this previous peak that we had. That's exactly where we came down to. I said a lot of things about Bitcoin. As a matter of fact, if you haven't seen my video on these rays on Bitcoin and their ability to predict support and resistance, you should absolutely go back and watch that. It's something like it's been in plain sight the whole time or something like that. Just look up Dr. Stock Bitcoin, or just when you subscribe to my channel, tap on the videos tab and then scroll down till you see the one on Bitcoin that it says that it's been right in front of our faces the whole time. So in any case, these rays, we are currently sitting on top of a ray right now, which is support for us. And also we're in this descending wedge pattern, which if we break out at the top of this thing and confirm the top trend line as support, we could see it to the upside. Unfortunately, right now, one of the drawbacks that we have is that by moving averages, the 50, the 200, and the 20-day, all simple moving averages, we're currently in sort of a bearish position at the moment. We do need to get back up on top of those moving averages, starting with the 20-day, to really start to see that bullishness come back. So we have a good sign right now. We want to look for that reversal to come in. It could come in sometime soon. There's a lot of moving pieces right now that affect the risk environment that we're in. While the markets seem to be easing a little bit and moving back up a little bit, this could be that time that you find a little bit of relief for Bitcoin as well. Now, mind you, there's more technicals. I just don't always have them up all the time because, well, it starts to look a bit messy. But when you put these values on here too, you can see the resistance area that we have from 89,000 to 92,000. You can see the support area, which is actually pretty wide, doubling up down here around 73 or 74, which I said, watch that. That could be a huge area for support for us. And we got that. But now we're in this little mired area, if you will. If we get back up in here, we have this nice free rise area of about 10% up above 81-ish thousand up to about 89.6. And well, that would be really nice to see. And then if we catch that on momentum, that could punch us through this resistance area that we have to the upside. The nice news is that to the downside, we have all this area of support down below Bitcoin, which could show us where that ultimate bottom would come in should we happen to sell off more, should we happen to go down below this bottom trend line, which we're hard pressed to close below this line. As a matter of fact, we did so, looks like one time on March the 10th and not since. XRP, by the way, consolidation pattern broke down below the bottom of it. That means that there could be a further sell. Honestly, I think it's still waiting on Bitcoin. And where is it setting right now? I said that this is another interesting chart. It is currently sitting on the 200-day. We want to stay up above that 200-day. Near-term bearish sign, the 20s down below the 50. When your faster moving averages cross down below your slower ones, those are usually called death crosses, and that can be a near-term bearish sign for us. Being up above the 200-day is still overall bullish. We still want to know what sort of risk environment that we're in. And right now we're sort of, the market got the initial impact of the fear of the tariffs and what is it going to do for inflation. All that uncertainty currently got priced in. Now we're starting to correct back up a little bit. It doesn't mean that the market is going to fully recover from right now. And I mentioned the 4 pillars. We need strong GDP. We just don't have strong GDP right now. We don't have that confirmation. The markets are going to be hesitant. We need subdued inflation. Well, we don't have that right now. The CPI and PPI this week could help us out. But honestly, with the pull forward orders that we saw in January and February, I don't know that we see it for March. I think that they could surprise to the upside. I think they might rattle the markets a little bit along with Michigan consumer sentiment. So we'll see what the next few days look for us, but we do want to watch those reports as they come out. I believe it's Thursday and Friday of this week. So we want to watch for those reports. Michigan consumer sentiment 10 a.m. on Friday as well. And if there's a lot of decrease in that consumer sentiment, that's going to be something that's also very informative to us. So those are some catalysts that we have coming up in the near term. Do not discount how important earnings are. Corporate earnings coming up for us, starting with the big banks. We have to hear what they're saying. We want to hear about the recession forecast. We also want to hear maybe from JP Morgan. I believe that they talk about the valuation of the S&P, as a matter of fact, what they think that's going to look like through Q2. So hopefully they give some sort of analysis on that they start to speak a little bit more about it, that they give us better guidance of what to look forward to. And hopefully it's a little bit sunshiny for us that we see some more recovery coming in. If not, at least we have technicals here on this channel and over at the Discord, if you join us, that you can rely on to help you out throughout this process and offer that sort of support. Guys, thank you very much for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.